Welcome to another episode. My name's Jose Najarro, and today I'm going to talk about some tips I followed during this bull market. Bear market? Bull market. It actually probably depends on what day you're listening to this video. It can be either or. We've been having big up days, we've been having big down days. These tips I follow have helped me out throughout either the up days or the down days, so I hope you guys enjoy. So let's get started. Before we begin, don't forget to hit that subscribe button. I'm also streaming live on Twitch and Mixers every Monday and Wednesdays and on some random days. You should get more info pulled up in the bottom here if you guys want more information on that. So like I said, right, today's episode is going to be on how I react in some tips I follow that have helped me during big up days and big down days. And so here are 5 tips, and I hope you guys enjoy them. If you guys have any other tips, feel free to post them in the comments. So like I mentioned in the intro, today I'm going to talk about a few tips that I follow during big up days and during big down days. Everybody needs a reminder, even myself. I almost found myself breaking some of my rules in these past few days, especially in those up days. Sometimes you have that guilt where, hey, I should have put more money in there. But I remember my rules, remember my tips, and it helped me out. So I'm hoping it might help you guys out too. So here are 5 tips, and we'll start off with tip number 1. And this is have money in the bank or have money outside of stocks. This is pretty much have money outside in the stocks ready to use. So I feel for me, one of the biggest reasons that I would ever lose money in the stock market is if I was put in a situation where I had to take out money from the stocks at the wrong time, where the market is down, because I need that cash at hand. So by always having some form of emergency fund, I would have money in the bank or wherever I keep it, under the mattress, in my shoebox, on my sock. I don't have it anywhere there, but if I did, right, I have money that I do not have to go into my accounts and sell my assets at a cheap price to be able to fund whatever emergency. So I think this is the biggest tip, and this, I think, allows me to sleep at night. I remember when I first started investing, this wasn't a rule I followed, and there were a few down days when I first started, and the experience, that gut punch feeling that you get when you know you don't have money elsewhere and you see your money just start to drop and drop, is not a happy feeling. And unfortunately, sometimes you learn through experience, and that's my experience that I learned. So for now, I always have money in the bank ready for any emergencies. Tip number 2, remember, this is a long-term game. For me, this kind of goes with tip number 1, right? When I put money into my account, I understand that this money going into this account is going to be money that I'm not going to see for probably the next 5 years. So even though I can easily sell an asset and take out the money, in my mentality, I go in putting that money in, acting like I won't be able to take this money out for the next 5 years. And with that mentality, it helps me go with tip number 1, where I understand that I have to keep money in the bank just because of an emergency. This is a long-term game. I'm not expecting to be a millionaire in the next 2-3 years. Hopefully, maybe in the next 10 to 15 years, I can say I probably made $1 million with the way I'm investing and with my great and awesome analysis that I go through. So for me, this is the long-term game. Money going here is staying here for at least 5 years. Tip number 3, invest regularly. So what does that mean? For me, I get a paycheck every 2 weeks. Every 2 weeks, I put money into my account, directly into my account. And that works fine. It works for two reasons. First, since it comes out right off my paycheck, it's income I honestly never see at the beginning. Right? It automatically takes it out. So it just goes and builds up an asset for me without ever me seeing that money right in my account. The second thing is just building up that account regularly helps you grow your account dramatically. I actually just started a new account when I started a few months ago. I actually started that account to make my YouTube portfolio based on the companies I talk about in my YouTube videos. So it helps me keep track of how I'm doing. And I started pretty much when I started really focusing on these videos to really see how I'm doing with my investments based on how I evaluate a company. And just I would check every month, every 2 weeks when I would do a video update, and my account would just grow dramatically just on my investments from my paycheck. And that just a small amount here and there will help your account grow, and it has definitely helped my account grow. Tip number 4: diversify. I think this is very important for me. Like I said, I am an active investor, so I choose the companies that I want to invest in. There might be some passive investors that just go in the SPY, and that's okay. If I did not enjoy this as much as I do, or if I did not have the time, and like I do now, to put my time into this passion, I would be a passive investor and just investing in SPY. But unfortunately, I actually do have a lot of time, and I find this to be a passion of mine. So I enjoy looking at companies. I enjoy reading 10Q reports, 10K reports. I enjoy looking at past data to determine what companies I want to invest in. But one thing is diversify. I don't want I follow a rule where one of my positions is never over 10%. Even those companies that I'm really, really bullish on. So when I'm really bullish on a company, it might hit 10%. Depending on how bullish. Most of my portfolio companies are between 5 to 2.5%. So I usually have a nice amount of stocks that I follow, around 25 plus, from time to time. And like I said, these are companies that when I invest for the long-term game. And diversify is very important, because if even though the thing is, I know I could be wrong. That I know for a fact. I can be 100% wrong. So even if I invest in a company that I'm completely bullish on, I can wake up one day and the worst thing could have happened to that stock, and I could have lost all my money in that company. So diversify is one tip that again helps me sleep at night wonderfully, even on these big down days, right? Imagine if I was just invested in airlines when all this happened. I would be, I don't even know. I would be lost for words. I wouldn't know what to do. So tip number 5, tip, rule, whichever you guys want to call it. This is the one I actually almost broke. And it's, what if you have extra money? What if I have extra money? So if I have extra money during these heavy down days, it is amazing, right? It is that great feeling that, hey, I know I can go pick up some stocks, some companies I've wanted to, for the down low, for the low. So during these heavy down days, it's amazing to have that extra amount of money. But there's one thing about these down days. You don't know, I don't know when these down days end. These down days can keep going on and on and on for the next 3 months consistently. So if I have extra money, what I do is I invest X amount of that extra money on down days. So I used to do every 3% down days, I would invest X amount of that extra money. But now, since we started hitting a little bit more heavy down days, and 3% was becoming a little more constant, I increased that threshold to 4%. So every 4% big drop, I pick up some companies that I want to pick up. And this is the one I try to break during big up days after heavy down days. So we've just had a huge gains in this past week, right? I think certain companies have gone up 30-40% in this past week. If you picked up at the bottom, you are living life right now, and congratulations to anybody that did that. Unfortunately, I'm not that smart to be able to pick up on those down days. So sometimes you get that remorse, that regret, that damn, I still have some money left. Let me put it now before it's too late. Let me go back into the market. And that's where I was wrong. So I did not do that. And good thing, I usually think before I invest, to some extent. And I'm like, hey, I'm still gonna invest X amount of dollars right now on days that I feel I regret. I'm gonna invest X amount of dollars. And I give myself a value, right? Because what if I would have thrown all my money on that big update? I would have regretted it later. So right now, right, I still have some extra cash at hand. I'm saving it for bigger down days. On days where I feel like, hey, maybe I should invest, I invest smaller amount than what I normally invest on heavy down days, just to crave that, just to get that trigger finger off my back and understand. But at the same time, right, I understand that, hey, Maybe it might not happen today, maybe not might not happen in the next few years, but if we have more down days, I have cash, some extra cash at hand. And if it doesn't happen, then I still have this extra money for some other type of investments that I might want to do. Maybe real estate. Maybe there's a time and point where I don't want to where I feel like the market is fine and my weekly investments will be fine, where I don't need to put extra money and I want to diversify into some other asset. So I think these are the two biggest rules that I need to follow. During the heavy down days, I should never go all amount, and that's what I do. This rule I follow to a T. During down days, I only invest X amount of dollars, and that's it. Because hey, tomorrow can be another big down day, and I still need some cash at hand. Unfortunately, during big up days, I haven't really had that experience that where I had that extra cash at hands. So I almost broke that rule, but hey, if I have that trigger finger, I invest smaller than I normally do on down days just to crave that trigger finger. I know if and again, this is after heavy down days. So the stocks right now, even though we had big up days, some stocks still need to go 40-50% up to go back to their all-time highs. Most of them are like, I think, in the 30% range. So even on this big up days after heavy down days, I personally think I'm gonna continue to invest because the prices are so cheap, but I'll do it in a smaller amount just because I could be wrong. So I hope you guys enjoyed this episode. Let me know what you guys think. If you guys have any other tips or tricks you guys want to share, I would completely appreciate if you post them in the comments. One thing I know about this game is there's so much that I don't know. I spent so many years easily. I'm an engineer. If you guys don't know, I'm an engineer, and I spent so much time for studying electrical engineering, which is not an easy task. But I have spent way more time reading about companies and understand how to read companies. So for me, this is a passion. And one thing with all that experience and all that reading, one thing I still know is that I can always be wrong. And me learning from other people, someone else might know something more than I do. And that's what I love about this community, right? Sometimes people just give vast amounts of information that, hey, I appreciate that information because these are things I would have never thought of. So make sure to post on the comments. Make sure you guys subscribe. I hope you guys enjoyed this video. I actually did get a new webcam. I got a new microphone. I fixed my whole layout, so I hope I'm producing some form of great content for you guys as well. So take care, have a good night, and see you next time.